Stock that's buzzing in trade today is Mold-Tek Packaging. The company's margins may have seen a bit of a contraction in the second quarter, but I think they're confident of maintaining the guidance in FY19. The last time we spoke to them, they'd spoken about a 15% volume growth for FY19. Let's talk about what's happened between then and now with Mr. J. Lakshmana Rao. He's the chairman and managing director of the company. Joins us right on the phone line. Mr. Rao, good having you. Thanks much for joining in.
Good afternoon.
How has business been, Mr. Rao, as we come to the end of the quarter? And more importantly, how have the cost rationalization process been like?
Good afternoon, everybody. As expected, this year guidance would be somewhere around 12 to 15% volume growth. We continue to hold on it. As discussed last time, we are moving capacities from RAK and adding them here back in Daman and Hyderabad. And today, in fact, I'm at Mysore attending the inaugural function of Asian Paints, who have started their production plant here in Mysore. And we are also just behind them. In a couple of weeks, we'll be starting our trial production. And by mid-January, we hope to start commercial production at our Mysore plant. And the plant at Vizag would, somewhere in the end of Feb, it will go into commercial production. So both the plants will be adding numbers starting at least, let's say, from March 2019. So those plants are on track. And shifting of RAK capacity will also enhance capacity utilization and better yields in the coming quarters, coming months. These are the two improvements as far as the capacity enhancement is concerned. And another on the positive front is our edible oil spare packs are picking up very well. We received orders from major companies like Damani and K Protein and major soya oil companies in the north and mid India. So that is another growth factor going forward from next quarter onwards. So we hope to cross into the region of 20% growth for the next financial year in volume. That is as of now, the status.
Right. Mr. Rao, if you can come in on your gross margins as well, and we have seen some amount of volatility and gross margins. At least in the second quarter, we had some amount of weakness coming in there. My question really is about input costs and the kind of trends they have seen and you are witnessing for your own company right now. One, how is that working out? Two, what impact does the volatility in crude have on input costs, especially with the ones in which you are dealing in? And three, the impact on margins that we can expect moving forward.
You have correctly guessed, though we pass on the raw material price increase on a monthly or quarterly basis to our clients. While the prices are going up, we also suffer a bit in terms of percentage margins, though the EBITDA margins stay almost stable. But the trend as a percentage of margin looks smaller if the raw material price is shooting up. That's what happened till November. Starting from mid-November, or I would say 22nd of November to be precise, the raw material prices started falling steeply. In fact, the correction was as high as almost 14% in the last 1 month. Starting from 22nd November today, we have prices down by almost 15 to 17%. And going forward with the crude prices ruling low, the raw material prices also are expected to come down. And in a coming down cycle, we gain because we take the pricing of higher raw material price. So we will have an advantage. So hopefully, if the price trend goes down and crude stays where it is, we may probably see improved margins in the coming months, starting from January.
All right. Mr. Rao, you also spoke about a facility coming online soon, which follows that of Asian Paints. Can you give us an update on how utilization stands currently and in terms of capacities, what we can expect towards the end of this financial year? What numbers are you looking at in terms of projection?
See, Asian Paint plants, though they are starting now, they would take some time to ramp up, but that won't be very long. Hopefully from April onwards, they will contribute reasonably well. Almost I'm expecting 8 to 10% growth coming from these two new plants in the next financial year. Coming to the fourth quarter numbers, we are very positive about the demand coming from ice cream sector, which starts picking up volumes from January. And now we have added major ice cream companies like Arun Ice Cream, that is Hudson. And of course, Vadilal has been with us, and Amul and Plaza going in a bigger numbers. Because this is our actually full season for ice cream. So we see the numbers adding up in the months of January till June, July from the ice cream sector. And the new ghee packs, what we introduced, also found very good response in the market. And their sales also starting from end of December, early January. So numbers of food as a percentage also will increase in the fourth quarter, which we didn't see in the last couple of quarters. They were more stagnant. So going forward, I think both the paint industry, numbers from Asian Paints, and the food from ice cream and ghee sectors will be adding to handsome numbers starting from January 19.
Right, Mr. Rao, on that note, if we could just add an additional question. While you have spoken about, being in partnership with a whole host of companies, even the second quarter you had added HUL as a client. If you can't name the companies, I understand, but is there more talk in the pipeline? Is there a potential for more companies to come in in the final quarter of this financial year?
Yeah, HUL, though the order came last 2 months ago, the molds are all ready just now, and we have started commercial production last week, and the real numbers will start showing from January. So the HUL orders impact is not felt in the third quarter, but from January we have to make supplies to them. So that will be added in the coming months.
Interesting. Just one quick question on the updates that you gave for the edible oil business. You mentioned that orders are coming in thick and fast. What would the numbers look like in that business, and how would they look like in FY20?
See, last year it was hardly 7 crores all put together, and currently for last 3 months alone we have done more than 6-7 crores. So going forward, if the numbers continue to grow or stay where they are, from maybe 12 to 15 crores this year, we can even look at 25-30 crores of sale value added in the next financial year.
Interesting. One small follow-up, and not really on the edible oil business, but on numbers. With a 15% volume growth, I think if I look at the brokerage notes, they expect revenue growth to be higher than that, about 20-22%. This is the analyst estimate. Would you believe that? One, is that a correct estimate? And two, if indeed that is correct, then when you do a 20% volume growth in FY20, what's the kind of revenue run rate that people should anticipate?
See, if the raw material prices have stayed what they were in the last 7 months, reaching a 20-22% of value growth, while 15% is the maximum volume growth we're anticipating, is a correct estimate. But if the raw material prices start going down in the next 3-4 months, probably the 2022 might look like 18-20, but it is certainly high because overall average raw material cost this year is higher than what it was last year. And going forward, I see for at least for the first 6 months of the next financial year, the raw material prices will be little sober. And the numbers on the revenue side, though we register 20% volume growth, the numbers on the revenue side also might look similar, like 20%, because the stagnated raw material pricing is what I'm anticipating in the next financial year.
Okay. So about 20% revenue growth in FY19 and 20% revenue growth in FY20 is a fair estimate, I would reckon.
Yeah, in terms of revenue, but if you really look at the value add in the next financial year is going to be much better.
All right, Mr. Rao, we'll leave it at that. Thank you so much for taking the time out and joining us this afternoon at Bloomberg Quint.